Good afternoon, traders. This is Christian from Trade Trade Group, and this is your end of day recap for Wednesday, August 7th. And big reversals across the screen. A lot of red on the screen, a lot of red, more so even from the where we started for the day, which we had another gap up today. I didn't really get why we were gapping up so much and why the market was up so much. I understand like the Japan moves have been causing have been causing some moves, but to me, it was just a little bit too exuberant, and it didn't make a ton of sense. And then also, it just makes for a really hard trading setup from the long side. If you are playing both sides of the market, you are probably doing pretty well right now, and just fading everything. It has been a market to fade everything. Up moves, down, well, down moves, maybe not so much because the market has been moving down, but I guess you can kind of say that from the beginning of the week. Before I get through any more, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. The VIX, what a reversal from the VIX today. I can bring that up as well. All right, so here's the VIX. So first I'm going to bring up the VIX curve, right? So this is basically showing whether there's contango or backwardation in the market, and there remains backwardation. And I've been posting this chart on Twitter a couple times, but we were moving in there. I think the last time, and I posted it a few times. So, but the last time I posted it, I was like, hey, the VIX was down to I think around like a 23, 24, and it was beginning to kind of flatten out. It didn't show contango, but it was beginning to flatten out. Now we're bid back up again. So I think my guess is part of this has to do with we continue to hear about geopolitical concerns, and we don't know what Iran's going to do, and we're also really not getting any community. I'm sorry, I'm not trying to be political, but we're not getting any messages from any administration about what's going on either. So, so again, I'll veer off from that, but I just don't understand what's really going on when something is going on internationally, and I guess the only message comes from a press secretary. So, in any event, I'll move. I'll move on. I try not to talk about politics, but you kind of have to wonder. Like normally, we're involved a little bit more, or at least like there's some negotiations going on. But so I think my guess is that's what's going on. And then also from a technical standpoint, I think we also got rejected. So before I go into the talk about that in the indices, so obviously we had this big spike up in volatility up to 65, but we're not really we're not coming down here at this point. I'm going to try to stretch this out a little bit, just to kind of show you, the moving averages are way down here. So, volatility is moving in the right direction here, but not falling down. So 27, I think that we don't really want to go back higher than where we were, which is around like a 33. So anything I think above 30, not particularly good. So that's what we have. And of course, again, I address the volatility when something different is going on. But you could see that was the biggest green thing on the screen today, volatility increasing decently. Small caps, I mean, so I talked about like fading things. Like what a U-turn in terms of the price action. So let's talk first about S&P futures and where we are. In my morning note, I talked about how we were, basically I don't think we took out, I guess we did at some point. We took out yesterday's highs, but we really couldn't hold it. And similar to yesterday, price not ready to kind of venture into higher levels because that was a decent rejection at the end of the day. Again, I didn't really understand some of the moves pre-market because SMCI reported and had a major reversal. I didn't understand why Nvidia was up. I wish I would have shorted it, but I'll go through that chart in just a second too. But there's your rejection at the first thing that has to be overcome, which is the 5-day moving average. Also, when you look at the 1-hour chart, you can notice that I've had like a trend line here just to kind of help because we're so far below the value area for on both that daily chart, which I just showed you, and the 1-hour chart. But there's your break of the trend line. So we were kind of holding that and grinding higher, but now you can kind of say maybe this was a bear flag or a pennant of some nature, wedge, And we've now broken that. And I think what you want to watch now at this point is the lows from earlier in the week, which are not that far away. Again, we could recoup and we can come back up here and move sideways. That would also be something that could be done here. But here's the cues as well. I don't have a trend line drawn there, but that's also kind of breaking. And again, not that far away from the lows of this week. Also, same thing, bit of a rejection there at the 5-period moving average. Again, that's the first thing that could be over, retaken. Not so much. I mentioned small caps, right? I mean, just amazing the U-turn in this, right? Everybody piling in and getting positive about the small caps. I, for one, wasn't one of them. I didn't think that things like regional banks were going to lead the market. I didn't short it. I wish I did in hindsight, because I was not a believer. And listen, I also missed out on this move on this move up here too. I thought it was going to be like a 1 or 2 day move. I really did. I didn't think that you're going to get what 1, 2, 3, 4. I guess you got 4 days out of it, and then we kind of hung around here at the highs. So it is what it is. Here's what I was also referring to is TLT, right? Big spike up in the movement in bonds, and yields went down. But look at the reversal there the last 3 days. So we're still holding some gains. But if you wanted to go long, like if your theory is to go long bonds, right? And we've seen this reversal in here like this, or this move back, maybe this is something that you like at this point. But keep in mind, we've got another big bond auction tomorrow. We have the 10-year bond auction today, a 30-year bond auction tomorrow. So that's kind of where we are. I mentioned I would talk about NVIDIA. I went over this chart, I think, yesterday. And I thought we kind of got a rejection yesterday. We certainly got a rejection today. So a lot of overhead. I've been talking about how this has been making lower highs. Again, if I didn't go over it in yesterday's video, I went over it in the trading room yesterday. But for now, that's the pattern: lower highs. Same thing with SMCI. Right? This has had a pattern of. I mean, this is a nasty move to the downside, but same thing. Right? No technical, like if you're purely looking at technicals or patterns, this is a very simple one. Lower highs. Here's your high, lower high, lower high, lower high, lower high. Trying, got rejected here, lower high, and then obviously a movement to the downside. So big reversal from yesterday. We saw it go up. Initial reaction, but that's a nasty move to the downside. Another name too that I was long a little bit, I reduced because I didn't want the exposure going into the earnings, which is ARM. They keep buying calls on this. I went over, I talked about this on Twitter, right? I think so here's my quick take. I'll try to go through this in 1 minute, right? My quick take is people these days, when I say people, probably retail traders, I don't think they fully get how to use options, right? Options, right? Number one, they give you leverage, right? So people really try to do that quite a bit, is they're trying to get leverage rather than kind of as a shortcut. So I get that, right? That's a way to kind of get exposure and to get a bigger exposure, but there's just such a difficult animal to use. What I really use options for, and I think is a better way to use options, is so first of all, for hedging, right? So hedging your downside risk, right? Because you're only paying the premium, to put on, that's insurance premium. Number two, right? It's there for speculation, right? And we've seen a lot of it's kind of lost its way because there's so much options that are being traded on a day-to-day basis. Talk about, I mean, that's of course speculation too, but I mean, like, in terms of speculation, whereas the stock is breaking down, and you don't want to own the stock, but because you could have a significant loss on your hands. So you can maybe buy calls or buy a call spread. This way you have a piece of the action, considering, like, if you're watching the option activity on the tape, that there's been a lot of option positioning the last couple of days, but you have no idea what they know. And people, I think, which is just odd to me, they always think that whoever's purchasing the options, they think that they're going to absolutely be right. And I've just seen it over the years where I've seen plenty of positioning and option activity. And I could tell you, even the bigger stuff, sometimes it's right, sometimes it's wrong. It's about 50% in my opinion, because I've done this, and I even see big orders, right? And you could go through it. It's very difficult, I think, because the people who are promoting option flow, they will never talk about the options that don't work. They just never return. They'll tweet them out, and they'll tweet them out, and they'll tweet them out, and they'll just ignore the ones that don't work. And they won't even talk about the risk management of when it doesn't work. Right? They just go on to the next one because it's a game for them. The more that there's option activity, the more that they can mention it, and then when it does go right, then they talk about how great a trade it was. But the other 50% they don't mention. So you have to have another game plan. Like if you're going to do something like that, if you're going to follow these people, you're probably going to end up with losses over time. Again, just my opinion. But so you have to think of another game plan. And so I think like a call spread here, if you're trying to think about, hey, maybe there is something going on, maybe it's positioning ahead of Nvidia earnings, maybe there's some speculation about ARM getting bought out again. Remember, Nvidia tried to buy them out, I think it was over a year at this point, and the regulators said no. Maybe someone else tries to do it. So again, it's all speculation, and that's what you could use options for. But there's certainly no guarantee. It doesn't matter how big somebody's putting a position in it, right? Case in point. And again, I bring up these all the time, but remember Nike, right? Oh, big positioning in Nike over here, right? Well, look at it. It hasn't done it. I mean, so anyway, I'll move on. But people, they just don't mention the losers ever. They just go on and on and on. So what else? Movers, I mean, I'll tell you, there's been some really good, I've talked about this. I talk about this almost every day, but look at some of the earnings reports that came out today. Fortinet up 17%, AXON up 12%, DT up 12%, Aspen Technology up decently. So a lot of good names in here, but unfortunately, there's some bad names too. Trex was down 21%. Charles River was down 12%. Airbnb got crushed. SMCI we already talked about. Dell and Sympathy, but you obviously have some names that are really getting hit. And you could see this as well after hours. Look at AppLovin down 10%, Rose down 12%, Sarepta down 9%. McKesson's now down, which they had good numbers. So maybe that one might be a buying opportunity. You've got some names up too, but not as many ups today after the close as downs. So there you have it. And I think you're really getting some separation now between earnings and what's been going on in terms of that. All right, guys, I'll leave it there. I think overall being patient with this market. We talked about as well this morning that this was even before the sell-off. I was talking about in my TTG trend portfolio, which looks at more longer term trends. I said I was getting out of a couple things like Amazon, a couple of things that are off the lows, and then of course volatility hit. And but that was my plan today, was after a bounce to get out of some of those names that did not report good earnings. All right, guys, that is it. Have a great night. See you tomorrow.